What's up, everyone? Did you see that? I was muted, but I managed to unmute myself. Long-term follower knows that it's not very common. Not very common for me to unmute myself without reading the comments first, seeing how everyone's screaming, "You're muted! You're muted! I can't hear what you're saying." Apparently, I can't pronounce any words today either. Give me a second. I gotta change the description of the Fiverr's YouTube live we got going on. So this is going to be another chill trading session. Thinking about it right now, I'm streaming with OBS. I'm thinking about getting the StreamYard application, the one that I use with Fiverr's. So easy, so simple. Now I have a few new viewers. Welcome to the channel and to the live stream. I'm gonna do a complete rebranding of the channel, by the way. Change the name from Arl Said Trading. It's going into my more personal brand. Just name it Jonathan Randin or something like that, to more reflect me as a person and me as a trader. Because I do feel sometimes with the word Arl Said Trading, I'm a bit stuck, with one way of doing things. I want to be more flexible in what I do. If you're wondering what I'm doing right now, I'm just changing some things for the upcoming live stream with the Fiverr's. Second here. Let me know if you have any questions, anything you want me to look at. I'm going to do an overview analysis of the markets here today. So I'm going to be looking at Forex market, the major Forex pairs, show you my ideas that I have. We're going to be talking about that dollar strength, the equity strength, relation between those. We're going to look at the Bitcoin. We're going to look at the crypto market. We're going to do look at some commitment of traders reports. We're going to look at yield spreads. Just do a quick overview and update on the positions that I have open as well. Open a new position on Euro JPY this morning as well. So I'm going to show you that one as well. And hit that like, by the way. If you're watching this on YouTube, which is the only place to watch it, make sure that you hit that like. It's actually helps quite a lot. Helps the channel quite a lot. Helps me a lot with the what I'm doing here. Okay, so while I wait for that to load, let's look at Euro USD here. Cold here in the office. Okay, so we got Euro USD. Obviously, we got the downside. Let me just copy paste this description that I'm working on. Oh, man. Got the Arl Said Slingshot here in the background. You know what, guys? Right now, you're able to get a discount on the RLZ exclusive membership. I believe that this live stream that we're doing right now is public. It's public on YouTube, but I'm also doing these within the community. I have this idea of, I had a set schedule, right? Every Monday, Tuesday, and Thursday, or every Monday, Wednesday, and Thursday. But what I want to be doing now is I want to try to go live every day. So I want to try to go live every morning, or when there's time to do so, or whenever I have something important coming up or something important I want to update you guys on. Try to do it on a daily basis. Obviously, I'm not going to be live on YouTube every day, but I will try to be live within the community every day. That's also where I share my analysis, where I share some of the setups that are not shared in the free community. So if you want that premium exclusive feeling and you want to get access to the indicator as well, you have to be an RLZ member for that. And you're not only getting access to the indicator and the community and the setups and the analysis and everything, you're also going to get access to a full trading course on the RLZ method. You're going to get a full trading course on how to use the RLZ Slingshot indicator, and then of course direct access to me. You can just send me a message within the RLZ exclusive channels and I will help you out with everything you need. Speaking of that, we do have a question that I want to go through that I've actually forgot about, so I'm really sorry for that. It's been quite stressful the last couple of days, but it's a question on the RLZ Slingshot for our alert system, because you're getting all the automated alerts from the RLZ Slingshot indicator. You're getting that to the you're getting that into the within the membership as well. So we have a question about why do we not have the Euro NCD and the NCD JPY setups in there. I'm gonna look over that. I'm gonna see if there's something wrong with the alerts, and I can do that live here in a while. I'll make sure to take a look at that. Finish the updating with the upcoming live stream with the fibers. For some reason, YouTube is lagging quite a lot, quite slow. Let us know in the comments. Okay, we got Mr. Pingu, colleague Penguin. What's your thoughts on GJ in the long run? Yeah, good question. Let's take a look at it. Take a look from a technical perspective. You know, obviously we have to I think there's, for this to be I'm not really interested in longing. I mean, obviously looking at the yen, we see that there's great weakness in the yen. We can look at the USD JPY, for example, strong move to the upside. And overall, the yen pairs, I'm long Euro JPY right now. One of the reasons I'm long Euro JPY is because technically it's just a very good setup. This is on the daily, so this is a swing trade based on the daily. And technically, I'm looking at this and seeing that it's just a very good, it's a very good setup. We can go all the way back to the weekly, and what we see here on the weekly is we've now reclaimed the 20 EMA here on the weekly. We have a break and retest of the 20 EMA here on the weekly. We also have the weekly open here. Obviously it's just, you know, it's Wednesday, but still it's a nice bounce here with the weekly open. It's a good weekly level here as well, reclaimed. It's a break and retest of that weekly level. Looking at the daily, we do have a break of a bottom formation, a big nice bottom formation been putting on the daily. We got a break in the structure of the daily. We also have a retest of the 20 to 15 and 100 EMA moving averages here as well as reclaim of the 20 EMA here as well. This is all that you're seeing on the chart here is part of the RSS Slingshot indicator. I have two of these on. If I activate that one, we're also going to get the signals, and you can see right here, very, very nice signals. That's a decent log signal right here on the daily, another decent log signal, and a very good couple of long signals here on the daily as well. The reason why this is not a long signal on the daily is because of the fact that I believe it did not reclaim the 20 EMA right here, and looking at stochastic sign, other indicators, it's very good structure right here. What about the Bollinger Bands? Let's put that on as well. Reclaim the midpoint of that Bollinger Bands. I think this looks really really good. Now we can go in and we can probably adjust this a little bit, see if we can activate a long signal. Now I don't recommend doing this obviously, but you can definitely try to maybe, you know, replicate a long signal here, because then we have to have the maybe 40 EMA. If that gets kind of like reclaimed, no, I'm not sure why that is not a, why it's not. Look at that, that is, it's pretty good when you narrow down the EMAs here. Still pretty decent, but it's still very good indicator to be able to identify the trends here. Very good. You're actually able to, if you use the discount code in the description, you can get a, I believe it's over 75% discount on the yearly plan, 50 on the monthly. So you get this for, you get this and everything else that's in the community for basically nothing. But let me explain what I have going on here from a technical point of view. So we have a break above resistance, a break and a retest of the breakout level confluent with the reload zone. If we put the reload zone to reload zone template on here, so you can see on the Fibonacci tool I have many different templates, like this one for example, and I'm using the RLZ to RLZ. Okay, so we got from the long RLZ to the RLZ extension. Now remember, don't confuse the RLZ extension with the short RLZ. Okay, the short reload zone is taken from that high to this low, and this creates the short RLZ right here. That on. Text, where do we have the text? Right here. Let's make it bigger. 20. Oh, I don't want the numbers to be. You know what? Let's remove the numbers. That's better. Short RLZ. Here we add RLZ. And the RLZ extension short. And then here we have the, obviously the long RLZ. Okay. So we don't confuse the two. It's the difference between the RLZ extension and the short RLZ, but this is taken from the high to the low. And a lot of times you'll see that an asset, whatever asset you're looking at, we can look at this bounce right here. You'll see that a lot of times it's going to bounce within the RLZ or on the 0.618. And here obviously on EURAD we do have, we can go to the weekly and we can add a level here. And you see that that level on the weekly is in a good confluence with the short RLZ. So it's a very good area. I'm expecting EURAD to run into resistance here. And I have my TP here at the short RLZ. I'm probably gonna have to move my TP down here, but we'll see. I don't have to move that right now. We don't even know if we're gonna break out. What I do know, however, is that I might take some partial profits on that high right there, and then of course move stops to entry when you have that breakout. So this is a long-term trade, because now with Trump getting into office and we're seeing some changes in macroeconomics, we're hopefully going to see more trending moves. You know, I'm looking for this market to, because from January this year to July, if you look at the yen, we had a very directional move, or a trending move. Go to the dollar currency index, you can see that the we also had, you know, from the beginning of January, we had a very good directionary move on the dollar currency index as well, and obviously now we had one strong move for drops here on dollar currency index. I am expecting the dollar currency index to run into resistance here, obviously, and then we have the CPI coming up, so I'm going to be talking about that a little bit as well. Just give me 1 second, I gotta fix this. So I want to walk you through my plans for CPI today. I'm going to be trading CPI live, by the way, later today with the trading room, the Forex trading room. That's going to be interesting. So I want to walk you through some of the ideas here I have with CPI. Obviously, it's going to be quite the important event because we have the dollar currency index obviously at resistance. All right. Okay. Okay, so we do have the dollar currency index at resistance right here, which is obviously we have a important CPI event, and let me go through some of my open positions, and I'm also going to talk about, you know, is this the top of the Bitcoin move? You know, I do think that obviously looking at Bitcoin right here is just absolutely insane, right? It's just this is crazy. By the way, look at the signal from the RLZ exclusive indicator. Look at that one, the RLZ Slingshot indicator. Look at the signal right here. That is the perfect signal right there for Bitcoin. It's just insane how it went straight through that last TP and just continued higher. But yeah, that's just a beauty right there. So looking at the weekly, we do have the monthly open down here right below the previous range highs. We got the 20 EMA here on the weekly. Obviously it's lagging behind quite a lot because we've had this big move to the upside. I mean, of course, I would love to see a move down here for Bitcoin. That would be obviously perfect. We're gonna get that? I don't know. Maybe. I do think what it comes down to is, like I said, the CPI numbers are going to be quite important. So let's yeah, good question. Let me explain what the CPI is. So CPI is short for Consumer Price Index, and the simplest way to look at this is it's a way to measure inflation. Okay, that's what it is. CPI is a way to measure inflation, and the way that they measure inflation is they have a basket of goods and services. Okay, so you look at the price changes in a basket of different goods and services. Okay, so, and there's two types of CPI releases. You have, well, first of all, let's explain. You have a basket of goods and services, and then you look at the price, the difference in price. Are prices going up or prices going down? What is the overall price of these goods and services? Now, of course, if prices are going up, that means that inflation is going up. If prices are stable, that means that, you know, there's no price increase. This is how you look at inflation, basically. And there's two types of CPI releases. That's there's other types, but the main economic numbers for CPI is the headline CPI and the core CPI. The headline CPI measures all items in that basket. So remember, you got a basket of things, to keep it simple, and the headline CPI looks at the price difference over time for all of the things in that basket. And then you have the core CPI. Now, the core CPI is important because it removes food and energy from that basket. So the core CPI does not include price changes for food and energy. Now, the reason for that is because food prices can be quite volatile depending on natural impacts. Like, for example, a hurricane season in Florida might affect different crops and things like that, and floods and more wind weather than usual might affect crops, and that might affect the price of whatever, and that's going to affect food. Same with energy, it's quite volatile. So the core CPI looks at that basket of goods, but it removes what they believe is the most volatile assets of that basket. Now, CPI is important because central banks, in this case the Federal Reserve, Central Bank of the US, they look at CPI, and obviously their job is to create price stability. And basically what price stability means is they want to have a stable inflation number, which I believe they say is around 2%. If inflation goes up, you have a very powerful tool as a central bank to manage that inflation, and that tool is interest rates. If you increase interest rates, if you lower interest rates, you'll help press inflation lower, basically, because if you increase the if you lower the interest rates, then obviously you can borrow money at lower interest. And just give me a second. I got a message here. Yeah, right. So the central bank looks at the CPI as the inflation number, and then they will use their tool with higher lowering or raising inflation to help manage inflation, basically. So a higher CPI tells you that inflation is going up, and if inflation is going up, the central banks might look at increasing interest rates to cool down the economy, because when you increase interest rates, money becomes more expensive. It's going to be more expensive to borrow money. So let's say, for example, you're going to buy a house, and you go to the bank and you say, I want to buy this house. How big of a loan can I get, and how much is that going to cost me? If the central bank increases the interest rate, that loan is going to cost you more. You're going to have to pay more in interest to get that loan, which means there's a lower chance that you will actually take the loan and buy a house. When the interest rate is very low, that means money is cheap. You can go to the bank, you can get a loan for that house, and you don't have to pay as much to get that loan. You don't have to pay as much interest. That means that gets the economy going. You know, people are going to the bank, they're getting more loans, they're getting more money. Money is cheaper, and they can borrow money, invest that money, Bitcoin, go all in and become rich, you know? So the Fed wants to cool down inflation by cooling down the economy, okay, by raising the rates. And then, of course, a lower CPI reading might lead to the federal bank cutting rates to stimulate economic growth, right? But now we're in a scenario where the Fed has already raised rates quite a lot because the CPI rating has been very high. Inflation has been going up quite a lot, so that the Federal Reserve has been forced to increase interest rates to cool down the economy. Now we're in a situation where the Fed is talking about lowering interest rates, right? And some traders are pricing in a specific amount of rate cuts the rest of the year and next year. But this is all dependent on the CPI. So, and also a higher CPI means potentially higher interest rates. And we're talking about the US dollar. So that's the interest rates on the US dollar, which means the US dollar becomes more attractive as an investment. Because if you're getting more interest rates by holding the US dollar, it becomes more attractive to investors to buy the dollar. And dollar strength is what we're seeing right now. And usually when you have dollar strength, you have a decrease in risk on assets like Bitcoin. And also Bitcoin is trading against the US dollar. And a lot of other equities, right? So if you look at the S&P 500, for example, the index for the equity market in the top 500 companies in America, usually you have USD strength means equities and risk on assets going down. Right now we have correlation though. Right now we have a correlation between the dollar strength and the S&P 500. So if you go right here, you can look at actually I opened up the wrong chart here, so I have to go back. See if I can add that back. Yeah, okay, so here's the dollar currency index. And here you have the relationship between the dollar currency index and the S&P 500. Most of the time, you will see an inverse correlation between the dollar currency index and the S&P 500, as you are seeing, for example, right here, where the S&P 500 is going down, while the dollar currency index or the dollar strength is going up. And then you'll, of course, have scenarios where they are following each other somewhat. But overall, you will see that there is a a bottom in the S&P 500 usually means a top in the dollar currency index. So there is an inverse correlation here between these two assets. Sometimes it's a positive correlation though, like we're seeing right now. I do feel like the positive correlation that we're seeing right now is one of the reasons why I'm trading, you know, I'm long risk on assets while at the same time being short Euro USD. So I'm long the dollar and risk assets at the same time. That's because I think that this relationship will hold true from a election to inauguration. The election, we had election on the Tuesday the 5th, and then inauguration is going to come along on Tuesday or Monday the 20th of January, I believe, and I think that's when the correlation will end. And I'm also expecting that to be the start of a major bull run or continuation of the current bull run that we have, unless inflation comes up significantly. Because if inflation comes up significantly, that means that there is extra pressure on the Fed to not increase rates, but maybe not decrease rates or lower rates as quickly as they once planned to do. So there's a lot of information here, but let's try to put this into the context of the open trades, the trades that I have open. What's up, Salan? And for you who asked about what CPI is and how it affects the market, let me know if this clears things up or if there's any aspect of what I'm saying that you want more clarification on. Just let me know and I'll help you out with that. So we'll look at Euro JPY. I think it's best to look at Euro USD actually, and I feel like, let's see, what risk do I have on? I have a trade open on EU right now. That's this second position right here, and what I'm gonna do now is I'm actually going to I feel like I have to keep that one open, but I'm gonna lower the stop loss on this one. What's up, Henry? You have to make sure that when you're looking at an open position and you're looking to manage that trade, you have to make sure that you're not managing the trade based on fear or based on trying to stay safe. Okay, we're you know, I'm a technical analyst. I'm trading based on the structure that I'm seeing based on technical analysis. I'm creating a story, I'm creating a bias, and I'm trading that. I'm not trading my, you know, for my own security here, and I'm not moving. I can't move my stop loss based on what I fear might happen or things like that. I need to make sure that if the bias, if I'm not seeing any clear signs of my bias shifting, then don't move my stop loss. But I can, of course, move my stop loss down on the short based on what I'm seeing with price action. And this idea is based on a type of market movement that I think we're going to see between when we had the election and inauguration. So that's going to be the 20th of January. So that's going to be all the way here. Okay, so I believe that we might actually hit these lows if this idea plays out and the dollar currency index breaks out. I think we might hit these lows in about 2 months, you know. So I'll keep holding this trade, you know what I mean? Like I'm gonna have to hold this here. So looking at the 4 hour or the 1 hour, that's just retarded, right? Looking at this and like, why would I want to move my stop loss now based on the lower time frames? Even though it looks like EU is putting in a nice bottom here, it's putting in a nice bottom, but I'm also long the Euro JPY. So if Euro USD puts in a bottom here, I'm still getting money on this one, right? And I'll be able to cut my losses on this one. So the entry for this trade is right here. Okay, so I want to make sure that I limit it. Now remember, I've already closed parts of this position, and I have most of what I have in here on EU is has the entry around this area. So how can I limit the loss of that trade? Well, I think having the stop loss here above these highs makes sense, because we've lost that level as support. We're not trading below that one, so we can now expect this level to act as resistance, and I want to have my stop loss all the way up here. The problem though with this is, if you look at this from a break and retest perspective, and you take into consideration the local price action, it looks quite likely that maybe we'll see a move up here and then we see a rejection. So that would then mean that I have my stop loss right on resistance. Okay, but then again, if we add a level here, we lost this support before bouncing. So we did have an initial bounce here. So you can look at, we had an initial bounce right here, moved up, and now we lost that level. So looking at local price action, yes, we might see a break and retest here, but that break and retest also means that we're reclaiming that support that we previously lost, which means strength, and I probably don't want to be in the trade at that point. So what I'm going to do on EU is I'm going to be moving my stop loss down here, limiting the loss of that trade. And I'm going to put it at 17. So I'm going to go in and I'm going to change the stop loss on that one. Update on update the setup as well. I appreciate you guys watching, liking the video. I really do. I see that the like numbers are going up. I really do appreciate that. So thank you for the support. Updated in the Discord. The fact that I'm moving stop loss down. So that's EU. Now let's look at GU. Well, GU is closed, so this one has hit TP. Beautiful trade, really nice trade. That one hit TP, so that one is closed. We got gold. What's the? I've taken some profits on gold as well. I have my stop loss in for gold here. USD/CHF. This is obviously a dollar strength long, and this would be dependent on if the dollar breaks. If the dollar breaks range highs, and I'm thinking that this is just a good shot of. It's just such a good range here, and if the dollar strength is going to continue, we'll probably see USD/CHF move up into the range highs region. AUD/JPY is a long. I'm in a long here on AUD/JPY. I've limited loss of this one because I do see some confirmation here now. Looking at the daily, it's a good break and retest on the daily. Even go down to the 4 hour to show you more clearly the break and retest on the 4 hour. Is obviously, of course, also quite visible on the daily as well. That's the 4 hour, and it's also on the daily. And then you have a double bottom here, W structure on the daily for AUD/JPY. What I see as an accumulation range here above the double bottom. And then the break and retest and everything on the 4 hour looks ready to move higher, very similar to what we have on EURAD/JPY. EURAD/JPY is just almost perfect. We can look at AUD/JPY. I mean, EURAD/JPY is perfect. We can look at AUD/JPY. Gonna add the reload zone here as well. I'm not sure if I want to use that low. I kind of view this as a deviation, but I kind of have to. And if that's the case, then obviously the reload zone, the mid zone of the reload zone comes in somewhere around this area. So I gotta be honest, I'm not really sure about this trade. Not really sure about this trade at all. I think technically EURAD/JPY looks so much better than AUD/JPY. But then I do believe that the euro is much weaker than AUD. Let's actually take a look at EURAD. I guess it's not really. I mean, last few days you had to move to the downside, so obviously like the euro versus AUD is reaching support here, and this could be an interesting way of doing it, you know. What age did I start trading? How old was I when I started trading? I was about 26, 27, I believe. Yeah, 27. 6 or 27. But yeah, about 7, almost 8 years. I think it was 8 years, seven maybe. Yeah, it should be 8 years because I remember started trading 1 year before my son was born, and he's 7 now, so it should be around 8. So the euro now, yeah, I'm 34 in about a month. But 1 month, 34. Sometimes I feel like I'm still 12. Yes, we got EU. Okay, maybe not 12, maybe 16. Okay, this is an interesting way of looking at euro AUD. So we have a long on the euro, and we have a long on euro JPY, and we have a long on AUD JPY. So we're both long AUD and the euro. So a good way of looking at which of these are strongest, we can look at euro AUD. Okay, and we might want to do some comparison here. Maybe we can do like this. So we got euro AUD, we got euro JPY, and AUD JPY. That's the euro JPY setup, and I believe this is the AUD JPY setup. It should be something like this, right? And at the bottom we have euro AUD. So if we do, because obviously if the euro is going to bounce against the AUD, then we should be seeing euro JPY outperforming AUD JPY. And we are obviously seeing euro AUD at the lows. And what I want to be doing here as well is on this screen at the bottom, this is the beauty of technical analysis, right? There's so many different things you can do here with technical analysis. But what we'll do here is, what happens if we add, let me kind of like have to explain my thought process here. What if I add the dollar currency index to overlay euro AUD? Because I want to see, because what I'm thinking is, how is the Australian dollar moving in relationship to dollar currency index? What is the correlation here? So one of the reasons why I went long AUD JPY first and not Euro JPY was AUD JPY is, you look at AUD JPY as it's almost like a risk sentiment indicator. In a risk-on environment, you usually see AUD JPY performing well. In the risk-on environment, you see AUD JPY not performing as well. So you can look at it as a barometer for, is it called barometer? Yeah, I think it's like, you can use it for like a barometer for global risk sentiment, because the AUD is considered a risk-on currency, which means obviously it's going to perform well when investors are positive on the global economy and willing to take on more risk, basically buy risk assets. And the JPY, the yen, is considered more of a safe haven currency, meaning it's going to strengthen when there's more investor uncertainty. But looking at the JPY now, we have, let's pull this on up. How do I, right. So look at the, where did Bitcoin come from? Oh, Euro JPY. So if you look at Euro JPY now, obviously we've had somewhat of a shift. Okay, we could definitely say we have somewhat of a shift here with this move down, and this is where the Bank of Japan started intervening, and we had a big move to the downside. I think though that we're gonna see continuation to the upside, and I do think that pairs like AUD JPY and perhaps also Euro JPY will start moving to the upside. But I want to look at this first and foremost. What I'm going to be adding the S&P 500. It's obviously very interesting to see that there's a quite obvious inverse correlation between the Euro AUD. So what we're seeing right now is the red line is the S&P 500. The S&P 500 puts in a low here, and Euro AUD puts in a top. The S&P 500 top, bottom, top, bottom, top, and a bottom. And if we look at the S&P 500, we can clearly see that, this is on the daily, we can clearly see a obvious breakout area right here on the S&P 500. Adding the fib, we can see that we do have the reload zone down here. And of course, if we add the 50, we see that it's very good confluence with this area with the 50% fib as well. But the fibs here doesn't really matter that much, but what we can see that there's a good level here. So, and now we add the dollar currency index, okay? So here we have the dollar currency index. And again, we see the positive correlation between the S&P 500 and the dollar currency index. Which, of course, previously for most of the time, it's not a positive correlation, it's an inverse correlation, meaning S&P 500 goes up, then the dollar currency index is going down. But here we are seeing a positive correlation between the dollar currency index and the S&P 500, and we're seeing a negative correlation between EURAD and these two, the S&P 500 and the dollar currency index. So we get CPI coming out later today, right? Now let's create a few scenarios here. What if the CPI numbers are higher than expected? What if the CPI numbers are higher than expected? What does that mean? That means that there's extra pressure on the Fed to maybe not to lower rates as quickly, which would mean dollar strength. Higher CPI, dollar strength. Higher CPI, dollar strength, equity weakness. So if we get a higher CPI, we should see the S&P 500 going down, with the dollar going up. And it's clear that it's the relationship between EURAD and S&P 500 that is the true correlation. You can see here a low on EURAD means a top in the dollar currency index, and a top on EURAD means a top in the, or means a low in the S&P 500, but not in the dollar currency index. So the correlation that we want to be looking at here is the S&P 500 and not necessarily the dollar currency index. For us, it's a correlation between EURAD and the S&P 500. We're going to be removing the dollar currency index here. Exactly. We're going to look at the S&P 500 because that's where we have the inverse correlation. So if the S&P 500, well, actually, you can look at the dollar currency index as well, but I do think that we're in a scenario now that's making it a bit different. But if we look at the S&P 500 here with EURAD, if inflation comes in higher than expected, we're probably going to see a reason for the S&P 500 to start moving lower, which would mean strength for EURAD. And if you look at EURAD, Euro JPY now, it's actually outperforming my AUD JPY long quite substantially, I should say. And that's most likely because Euro AUD is at support. Look at the weekly. Yeah, this is weekly support. There's definitely a reason for Euro AUD to bounce here. Let's look at USD AUD. No, it's AUD USD, isn't it? We have a question here saying, so before taking any trade on Euro 80, first check what S&P 500 is doing. Not necessarily. I mean, definitely could be an interesting way of doing things, but it depends on the way you're doing your analysis, and depends on the way that it depends on many different factors, the way you trade. But for me, I like to get especially in this market condition that we're in now, where I do think we're going to get a lot of trending markets and a lot of directionary moves. I want to be able to catch the big moves that we might be seeing going into next year. But what we can do is we can look at the strength of AUD. And the way, let's try to think of a way to measure the strength of AUD versus the strength of the euro. How can we do that? Well, let's open up a new. Never done this before, but it's quite logical the way you do it. So we'll do a currency. That even, what language is that? Never mind. Okay, so we're gonna do our own currency strength meter here. Yeah, I have to look up to see if this is actually possible. Let me take a look. This could be really cool if it's possible. I don't think I've ever seen anyone do it before. It'd be very interesting to see. Okay, let me just look this up. Okay, so I got this idea. You know how you can look at the yield spread between two countries' bonds? I could probably write a script on this as well, but I'm obviously not going to do that now. Let's try this. Okay. What if we want to measure the strength of the euro? So we do USD plus Euro GBP plus Euro AD. I wonder if this is correct, right? Because if we just add all the pairs together with a plus sign, shouldn't that just add all the pairs on here? I'm not sure, but it kind of makes sense, you know. Let's see. We do EURUSD, and then we're going to be adding on here. We're going to be adding on Euro GBP, Euro AD, EURUSD. Okay, so this is, here we have Euro USD, Euro GBP, and Euro AUD. What else do we have? Let's add Euro CHF as well. What if I have it on the same percentage scale? If that makes a difference. I don't think I want to do that. Euro CHF. And weekly. Now, what if I add a new one, which is going to be Euro USD plus Euro GBP and Euro AD and Euro CHF. This should then create a that should put them all together. Should put all the values together, which means it should probably be all the way up here, right? Yes, if you look at the green one, basically what you do with the green one is you basically just combine values of all of them. Which is not really the way you want to do it, because then it's based on the actual value of that one. So the ones that have the highest value, which is Euro CHF, then Euro CHF will be the one that dictates the trend of that one. So that's not the way you want to do it. Look at if there is a currency strength indicator. Okay, let's try this one. Now, the thing is, I would love to be able to yeah, pretty much. You're right, Henry, something like that. So right now we're looking at Euro GBP, no, Euro USD. And this is supposed to be the currency strength meter. And there's going to be a different, obviously, but this is not really showing me anything. So what this shows us is, obviously you see that yellow line going up, that's the USD. So that's and this should be the same for all in the this one should be the same. So if you go to Euro GBP, yeah, we're gonna get the same numbers on this one. So this currency strength indicator is obviously working regardless of what pair we are looking at, but it changes with the time frame that we're using. So the euro is blue, which means on the daily we should be seeing a tick up. Yeah. Now I gotta work more on that. I gotta try to get a bit better structure for how to, but we can add just the euro and create change the background for this one. Probably better if it's gray or something. It's going to be the euro. And this could be interesting, right? We could be removing everything but the AUD and the euro. And we can see that seems to be an inverse correlation here most of the time. You can see that there's, I think the inverse correlation is quite obvious now, at least with the high and a low, low, high, and then a low and somewhat of a high here. Go back to the weekly. On the weekly, we're seeing euro weakness, obviously. It's quite clear. On the daily, we're seeing a increase in, yeah, you know what, let's just move on from that one. Let's not put too much emphasis on that. I'm going to work out a system for looking at that. But what I'm trying to figure out now is back to this chart here. Sometimes what I try to do when looking at determining the strength of different currencies is we can just look at, we can also have a watch list where we combine all the Forex pairs. We group them, right? Well, we can look at the euro pairs first to get a sense of strength. Obviously, you can see on Euro USD that not looking very strong, but it's at support. Euro JPY moving higher. Okay, Euro NCD at support. Okay, Euro AUD at support. Euro GBP now bounce at support. Euro CAD obviously very weak, but it's showing some type of bounce at support. We get Euro CHF at support as well. And now we look at the AUD. AUD JPY bullish but moving slowly. AUD USD very bearish against the dollar, not looking good at all. AUD CHF. AUD CHF is strong, but at resistance. AUD NCD at support as well, not looking very strong. AUD CAD looking quite weak, lost support. Yeah, I think it looks like Euro is overall stronger than AUD. Let's see if we can look at a currency strength meter. Why can't I make it bigger? Okay, so this is the currency strength meter. And, you know, maybe you want to use something like this instead of going through all the hustle that I did with the trying to create, you know, build one on your own. But you obviously see USD very strong, gaining strength. The AUD, I said medium strong, medium strength, and losing strength. And the Euro is just very, very strong. So here's when this is showing me also that I'm in a good position with the USD and CHF, because USD is strong and CHF is very weak, and I'm long USD versus CHF. So I'm long USD and short CHF, and I'm also long the Euro versus the yen. But I'm also long AUD versus the yen, and this is where I have to make a decision. Which one of these trades am I going to keep open? Am I going to keep open the AUD JPY trade or the Euro JPY trade? And I think that decision, the outcome of that decision, or will it be determined by the CPI numbers? Is what I'm thinking. Or I might just close AUD JPY. There's a much no, I'm gonna keep them open. The risk is all right. Okay, guys, I think that's it for me today. I don't really have any trade ideas I'm looking at. I'm gonna do another live stream tomorrow. Take a look at, you know, the results of the CPI, do updates on price action, and see, you know, how did CPI affect price action, how did CPI affect my trades and my trading, and what decisions did I take based on the CPI numbers. All right, that's it for me today. Hope to see you all in the Forex live trading room later today as well. We're going to be looking at CPI live. All right, take care, guys, and thanks for joining.